Here's some other stuff that I thought was interesting to talk about, right? You might have had your eye on this stock over here, Alibaba, baby. Well, I'm interested in this one. You might as well be as well. As you can see, the first trade worked out very well. The first one, in all honesty, we'd hoped to take this trade and it hadn't gone to plan. It was a 34-1 risk to reward. So we thought to ourselves, if we can get a trade like this in the next 33 trades, then we'll have made back our money and then some. So we didn't panic too much when it broke that. We took the next trade that we had lined up, which was another 34-1 risk to reward, and it paid out. It went almost directly to the target. So, you know, we're golden, right? It wasn't 34-1 that we got. Well, let's call it 33-1 that we made on that trade. It's hilarious. And we marked out how there was this box of liquidity, the issues for it, right? And as you can see here, click on the 4-hour time frame so it's more obvious. As you can see here, it struggled to ever get a close above this, like a close, open, close, you know, it struggled. It tried a bit here, so sympathies to anybody that took that. And then got washed out in the next market open back down to where we're at before. This one is definitely an interesting one, but it's just having a little bit of that whole more time in the trade, less time being paid function there. I think that if you're not in the trade and you're waiting for yet better discount, probably another % or 2 to get on this one, targeting like the 200 simple period moving average, which is currently there. This is the shape of the 50 period simple moving average on the 4-hour time frame. So there's going to be a cross in here, probably, and that's pretty good. We already know that because we've been long since the lows. So, you know, lagging indicators, etc. And yeah, so anyway, we've been long since the lows, lagging in here indicators. We took profit actually, let's be honest. But this is still on, right? Still on. It's just waiting for this to give everybody that's like slow to enter the opportunity. There is one kind of, you know, aspect here worth pointing out, right? This here, the fact that this gap was at the top end of that yellow box, filled with the next liquidity, which made it difficult to trust, right? So you didn't want to get long on that until it had done it. Came back down, went above it again, came back down. So this region here is what we're going to really be concerned about breaking. If you want to wait to reduce your risk and try and do some sort of momentum play, where's the breakout most likely to be at? Now, I'm not saying this is where it's going to be at, but the breakout may most likely be at here. This region in between is a little bit dodgy, to be fair, but the opportunity exists around about this mark here, so long as, you know, giving you the opportunity to manage risk like this again, by the way. Okay. All right, so that's what we'll call it right there. I'll see if we get that trade. Anyway, I'm interested in Alibaba. If this fails, then what am I doing? I'm sitting back. I'm not trading this loss. Why would I not trade it loss? As you can see, I took a trade, was happy to take another, but does that mean I'm happy to take another 33 of them in the same day? It does not mean that. It does not mean that. If this here does not work, I'll be sitting on my hands looking to see if there's a retrace. The Fibonacci, which I've got drawn in from this high to this low, that's what this Fibonacci here has, a 236 at this price point, but it would have flipped over by the time that happens, and you'd be looking to come down to test off of one of these numbers, you know, and that would make sense because they'd have the $100 price point is here at the 236, and like $100 where the 236 is, does that get tested and not fill in this gap? Does it and not fill in that gap? I don't know, like, you know, so this is like one of the benefits of being a discretionary trader and taking the time to analyze a chart. Welcome to show if you're an analyst or a trader or investor, but yeah, you know, you'll be looking and having to be aware of the fact that that artifact exists on the charts. You'd be looking for it to come down and test these regions possibly instead. And it makes sense because it's $100, right? And volatility at $100 is so easy. So like it's such a clear area where people manage risk, etc. So so would I be trading that lots in that zone? No, I'd let it speak for itself first. Let it speak for itself first.